this is Pat Walker at Mission Winners making a training coaching video here on MasterCard. First off, MasterCard is a Dow stock, and the Dow is quite strong, outperforming the NASDAQ. More importantly, it's a matchless stock. Also, it has a relatively clean and simple, longer, flat base. As you can see, I noted with a line. One of the best, most reliable chart patterns are clean and simple bases. It doesn't need to be a cup and a handle. It simply has to be a chart pattern that a fifth grader could see and say, gosh, I guess if it takes out that white line, that'd be really good. It increases the odds that other people see the pattern and that they will buy also. And isn't that what we want? Of course. We want other people acting with us. So here it is going sideways. By the way, note this bar. Was this a good bar? It was a very good bar. Look at the volume pickup here. And then what's it do? After that heavy volume where it closed right near the highs for the day, it pulls back a couple of days on less volume than what it went up on. You can say, gosh, I guess if it takes out that white line on volume, it would be good. So what are we going to do? I'm going to enlarge the chart a bit so you can see this easier, and I'm going to shift it over one day. There's a reason I do this, and I do this all the time at Mission Winners. I slide charts back before they break out, and there's a reason why. A perceptual bias can enter into our thought processes if we're always looking at charts after the fact. This is just things that I've learned through teaching years ago and things, etc., and being a meetup leader for IBD leader for years. So 12 years. So co-leader, excuse me. So let's advance it. And it lifts through these tops on a good pickup in volume. It closed okay, all right? That was a slight concern, all right, but it closed okay. This was yesterday. Advance it one day. This is today, March 9th. It ran up and then started to pull back. This is the daily chart. We had a good gain here, all right? But we're not going to get sloppy and let it disappear. That would be wrong. So what do? Take it down to the hourly chart. Here's the hourly chart, and you can see that tail bar. Take it down to 30-minute, and you can see where it rallied up and it tailed off. Take it to 10-minute. Rallies up, and then starts to fall. And what did we do? As it was starting to pull back here, with the market also getting sloppier, we took some off. We sold a third and locked in profits, guaranteed profits, managing the stock and managing risk. Also, we factor into the equation, there's not a lot of stocks acting good right now. So what do? We're not going to argue with market action. We will act accordingly. Now, I'm going to take it a step further here. You can say, well, what do you mean by market action? I don't really look at the Dow, okay? It's 30 stocks and it's price weighted. Here's the spiders. I mean, this thing fell on heavy volume and it's rallying back on decreasing volume. This isn't the best action in the world, okay? And I'm going to show you QLD. In fact, I'll show you SSO and QLD. Look at SSO, down on heavy volume, rallies back. This is loose. This is not clean and simple. So what's our reaction? We're not going to overstay our welcome. If we can sell some into strength and guarantee profits, we'll do it. Here's QLD. Look at this. It's below the falling 50-day, and that baby fell on heavy volume 4 days ago. So here's the 50-day on QLD. Here's the 50-day on SSO. Which one is stronger? Well, SSO is stronger. Let's think for a minute. MasterCard, NASDAQ stock? No, it's not. It's in the S&P 500. There you go. We focus on where the strength is, and we never argue with it. Anyway, I hope this helps you. I just wanted to kind of combine several different variables, factors, observations together in a simple format so it makes sense, and I hope it helps you.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.